Once again, hi everybody. Terry Ryder from hotspotting.com.au. Welcome to today's special webinar event. I'm going to be speaking today to Mark Shorrock from Bluestone Property Management on a subject that I think is of critical importance to all investors who want to squeeze the maximum performance out of their properties. That is a really good property manager, and I think the operative word there is good. I'm often amazed at the number of investors I speak to who think that managing their investment properties themselves is a good idea because they might save a bit of money, and others who think that a cut price property manager makes sense. And I think this often turns out to be a classic case of false economy. So today we're speaking about why a good property manager is worth every penny and how you go about finding a good one. We're going to work through this webinar by addressing a series of key questions, and the expert answers are going to come from Mark Shorrock from Bluestone Property Management. So welcome, Mark. How are you going today?
Yeah, good. Thanks, Terry. Thanks for having me. I'm really excited about sharing my knowledge with your followers and educating everyone so they can make some well-informed decisions about their future.
Okay, well, over to you really to work through your slide presentation. You and I are having a bit of a discussion about it, but it's not going to be more you than me because you're the one who's the expert on this subject, and I'm perhaps not as much a novice as a lot of people are out there, but you're the expert, so over to you.
Okay, thanks, Terry. Look, we've got a bunch of information here to get through today, and probably more questions than we'll be able to address. However, I have listed them in an order of priority. I think is from the most commonly asked questions to downwards from there. And if we don't quite get through everything, I'll try and sort of do a general overview and skip over the top. And if we don't quite get through everything, then for anyone that hangs around till the end and signs up for the complimentary health check, we'll get a bonus cheat sheet from me, which will include a list of all of the questions and all of the answers. So really quickly, just a quick disclaimer there. This advice is general in nature. We encourage all of the people we speak to do their own research, form their own opinion naturally. Your choice of property manager or agency is critical to your success as an investor because it's your property manager that's finding your tenants, vetting them, drafting the lease, facilitating the bond, collecting your rent, routinely inspecting the property and organising maintenance and any urgent repairs on your behalf. Valuable time that you spend on the front end in researching and finding this property can quickly be eroded by choosing the wrong or a bad property manager. A good or a quality property manager will, more than cover their fees and often will make you more money than you're trying to save by going with a discount provider, while maintaining the value of the asset to its highest and best value. I haven't met a property investor yet that invested in property to lose money intentionally anyway. So, well, there are the obvious tax deductible benefits there for some people, but generally speaking, most people don't want to get into it to lose money. As you've mentioned, your specialty is sort of more the market than mine. The market's ever changing, Terry, as you know, and unfortunately, a lot of investors don't value the relationship with their property manager highly enough, and they base that decision primarily on fees, which we'll touch on later. But I basically coined the expression, a cheap property manager can end up being very expensive. Savvy investors that we speak to and manage properties for know that a good property manager can make or break your portfolio. So you need to select someone whose, management style is aligned with your investment goals. And the easiest way to establish that is by asking them or interviewing them with the following sort of questions that we are commonly asked. Hopefully today, the people listening, attending the webinar will be able to go away with be more informed and make educated and well-informed decisions about their property investment future. If we don't cover anything, of course, there's an opportunity for people to ask Terry questions, which he'll post to me. And if we don't get through those, then, like I said, we'll email these sheets out at the end. People can get it. A little bit about me very, very quickly. I'm a second generation agent. My parents have been real estate agents since I was 5 years old. I've had 20 plus years of comprehensive hands-on industry experience, and equally as many indirectly, growing up in a household with my parents owning and operating 3 LJ Hooker franchises. I've held every position from the front door to the back door and the floor to the ceiling. And even though I'm the managing director of this business here, there's not a job I'm not willing to roll my sleeves up and get my hands dirty doing. Ultimately, I'm driven just about helping people with their properties. I think everyone's going to love this webinar today. Like you said, it's an opportunity for people to tap into my 20 years experience and hopefully, find out some of the answers to some of the questions which property managers don't want people to know. There's a quick mention there on that page. If you hang around till the end and sign up for the complimentary health check, which we're offering today, you'll receive the cheat sheets as a bonus offer. As promised, we'll get through to the next part and start punching through these questions for people. Probably, we're not asked this question as much as what I think we should be, and that's what skill sets are required to manage an investment property. Some people struggle to manage 1 or 2 properties, let alone a property manager who typically can manage up to about 150 properties. So we find organisational and time management skills imperative. The ability to schedule and multitask, naturally be a good communicator, negotiation skills, mediating skills. You need to be marketer, advertising, conduct research, reporting. The job everyone loves to hate, being a debt collector, a necessary evil, general property knowledge, and that's not just in relation to the types of properties, know the difference between a villa and a townhouse, a unit and a house, but also generally property maintenance. You need to sort of be a bit of a jack of all trades as a good property manager so that you can help troubleshoot problems with the aim of mitigating loss for investors. Nobody wants a call-out fee for $90 for an electrician only to find that they flick a switch in the meter box. Ultimately, they need to be a tech-savvy team player that's adaptable. Probably the biggest skill I look for when hiring property managers is someone who's resilient. A property manager is an extremely tough job. You're often pushed from pillar to post, playing piggy in the middle, mediating between owners and tenants, trying to find a suitable outcome. Next question, why shouldn't you select a property manager based on fee structures alone? I think this is definitely an underrated question. It is something that we are asked, and the way we're asked that is, people ring us up and say, look, we're interested in changing property managers, how much do you charge? And that sort of forms the basis of this question here. Just remember that a cheap property manager can end up being very expensive. Discount providers can cost you money, more money than you're trying to save, through below market rent, poor tenant selection, through damage, cleaning costs and loss of rent. Generally, I find people are better off saving money on everyday items, but not trying to cut their fees or find a discount provider for arguably one of the most valuable assets they own. The average value of a property on our rent roll is around about $450,000. And at the end of the day, the difference between, say, 8 and 7% is less than $5 a week. When you look at it like that and it puts it into perspective, I think it's a powerful statement.
Yep.
Next question, does it matter if the agency's focus is on sales and not property management? Another very, very good question. And yes, I believe it does. Look, at Bluestone here, we are primarily a property management focused business, hence the name. However, we do sales if that's something that our clients need to do. Unfortunately, people don't buy an investment property with the aim to sell it, but circumstances outside of their control prevail, and in which case they need to sell it. And, without a doubt, the agent that's managing the property for you, in my opinion, and 20 plus years experience, is the best agent to maximise the outcome of that sale for you. Unlike most agencies, our focus is on rentals. And one of the reasons I find why agencies focus on sales is because it's a high profile of the two. And as you may be aware, agents sort of, I guess, drive around in some nice cars and wear splash suits and can be prima donnas. And property management is sort of the poor cousin. But as a business owner myself, I know that that forms the bread and butter and the backbone to our business and is responsible for the cash flow. Next question is, how familiar is your property manager with current and relevant legislation? This is an extremely good question, and one that we're not asked directly in this context, but rentals is very, very complex, and the legislation is quite ambiguous, and it's even misinterpreted and misunderstood by professionals like property managements, and even we find QCAT adjudicators and mediators. Our team has combined 79 years experience, and we still don't even claim to know the Act inside and out. The problem with property management, I guess, is for people that every owner, every tenant, every property is unique, and every situation, therefore, is unique. Rarely do we see a situation that is exactly the same as one before it. Due to this, we invest heavily here at Bluestone into an industry best practice and legislation provider. It does cost us a couple of $1,000s a year, but it is arm's length independent advice. I would probably say once a month we need to go to our best practice advisor and ask them the question about the technicalities of an issue that we're trying to deal with, maybe something typically a tenant related. In a tenant might be able to try and get out of a lease, or might be sort of using an angle or leveraging off legislation to try and get something to their favour. Look, you're going to ask a question there, Terry?
Yeah, it seems to me that understanding the complexities of the laws, and I think they're a little bit different from one state to another, is probably one of the prime reasons why a smart property investor will have a good property manager on the team rather than trying to handle it themselves. It's hard enough for a specialist to keep up with all the technicalities and the legislative requirements, let alone somebody out there who's not a specialist and trying to manage their own property.
Yeah, that's right. And I just don't think you get enough experience being a private owner, a private landlord, or if you're in a small agency, I guess, that there's no substitute for experience. That's one of the things I love saying. And at the end of the day, with what I know, I've had 40 years of indirect exposure to real estate and 20 years direct. And knowing what I know about the industry, I would never try and manage my own property. And that's not like a strategy to try and get people to go with property managers. I would even suggest that someone went with our competition rather than do it themselves. And there was an article on news.com yesterday, and I believe it was on the local news in Adelaide during the week, where serial offender tenants were going around through private landlords and manipulating the legislation to their advantage by paying the bond and 2 weeks rent up in advance, but knowing that it would take the private landlords around about 6 months to kick them out of the property, and they would therefore live there for effectively 4.5 months rent free.
Right.
And that, I mean, you don't need to be a rocket scientist to do the calculations on that and work out that, on an average management fee at, say, around about 8% on a property worth about $450,000 is around about $1,700 a year. That there's around about 4 weeks rent. So you do the sums on that. It's a tax deductible fee for most people, depending on their financial situation. But it's a small investment into the security and peace of mind that you can put your head on your pillow at night and fall asleep. Yeah. All righty, we'll jump into the next question there. I put this slide next, particularly to follow on from that previous question, is how should a property manager screen prospective tenants with regards to creditworthiness, past rental history, and their current employment? We have a policy here at Bluestone, which is what we call a suitable or a pre-approved tenant policy. I'll just jump through this really quickly. And a suitable tenant is a tenant that meets the following criteria, not listed on any national tenancy database like a blacklist. At least one applicant over 18 years of age. Income test met. The general rule of thumb here in Queensland, maybe nationally, is that the week cannot exceed more than 30% of the net weekly income. Constant employment for the previous 12 months. Naturally, there are exceptions to that rule, but it's assessed on a case-to-case, case-by-case scenario or basis. Meets body corporate bylaws, in particular pets. Doesn't exceed the number of occupants on the management agreement, which can be overwritten in writing by the seller, but primarily needs to fall underneath Queensland fire safety legislation. The living arrangements for 2 previous years declared, either rental history or ownership. Rental history does not include more than 2 notices to remedy breach issued within a 12-month term due to rental arrears, notice to leave, any unremedied breaches, any other serious breaches, objectionable behaviour or significant damage to the property. Inspected the property by someone on their behalf. If they can't, obviously, again, there sometimes we see people moving from interstate or overseas, and in that case, we ask them to have someone they know, family, friend, colleague, inspect the property for them. If that can't be done, to protect the owner, we insert a special condition into the lease, which is like a sight unseen clause, which means that after the tenants move in, they can't say that the property wasn't as they thought it was going to be and apply to QCAT and move out. Obviously, leaving the tenants out of pocket, the owners out of pocket with a vacancy period and another letting fee and so on and so forth. We generally seek lease terms greater than 6 months. A lot of information there that I went through quite quickly, but again, just remind anyone who's listening here today, we can send these notes out to you at the end. How should a property manager handle situations such as tenants missing a rental payment? Logically, the next question to follow on from the previous one. And good property managers understand that even quality tenants that have jumped through all the hoops, met all of the standard requirements and put all in the ticks in the boxes that we just mentioned, sometimes fall into financial trouble or relationship breakdowns. So we invest heavily into a cloud-based CRM, which has an automated arrears notification process. So we have text messages, SMSs, prompts to calls and emails to go out from 4 days plus. At 8 days, we contact the owner and ask them if they'd like us to send a notice to remedy breach. That is our recommendation, because underneath legislation, that needs to be done. If the tenant doesn't remedy that breach, which means pay the rent within the next 7 days, and the 15th day we can issue under Queensland legislation a notice for those tenants to leave. That notice can be revoked at any stage by the owners. But again, we need to start the ball rolling there early, because if like some agencies we pick up managements from other agencies, and the reason that the owners are leaving, they're unhappy for other reasons, but primarily because their tenants are, a month or 6 weeks, 2 months behind in their rent. And the agency unfortunately hasn't started the process early enough. Now, we always suggest to our owners that they issue that notice on the 8th day, even if the tenants are in sort of situation out of their control. And the reason we do that is that we contact the tenants and mention to them that, look, it's really just a standard requirement to follow process that we're issuing that. And the reason that we're doing it, that it can be revoked at any stage. Primarily, the owner is our client and the one who's paying us our fees. So we need to try and be fair for both parties, but ultimately we're trying to protect you as the owner of the property and mitigate loss through loss of rent. The other thing is to always notify owners that their tenants are in arrears is extremely important, because a lot of our owners, as I'm sure most people can appreciate, are relying on those rental payments to make mortgage repayments on these same properties.
So, Mark, how common is it for tenants to fall behind in their rents and become a problem in that regard? Does that happen regularly, or is it just a very much a minority of people on your books?
Yeah, it is a minority. It does happen regularly. look, over the years, we run on a very low percentage. It's a couple of percent, generally around 3 or 4% at tenants that are in what we call 4 days in arrears or more. At our agency here at Bluestone, we don't see serial offenders staying there. It's generally a cycle of people going through, and we see that happens at certain times a year. It is a good question, Terry, and I'm glad you asked that because, sort of February, March, when people's credit cards are due after Christmas, notoriously bad time. Christmas period when people are spending up, tenants are spending up big on Christmas presents is a notoriously bad time. We have a bit of a process here. It's quite unique within the industry where we do encourage our tenants potentially to pay $10 extra a week towards their rent. And what that does is if they can pay $10 a week, that gives them an extra $500 buffer. They could effectively kick back out a couple of times a year when they're under a bit of financial pressure and not pay their rent. It's little small steps. If they can afford $20 a week, that gives them a $1,000 buffer, thereabouts, and creates an extra buffer again in case they fall on hard times or something as a surprise comes up within their own financial budget.
And people who do get into trouble and get behind, do they commonly come in and have a chat about and explain, or is it something that the property manager needs to pursue?
Yeah, look, both. It is. We get a mixture because it really comes down to tenant selection. If on the front end we are stringent in our tenant selection process, making sure we don't compromise on the criteria that we mentioned before, then typically you end up with fairly good quality tenants that have quite conscientious, and most of them are proactive in letting you know their rental payments are going to be late. Naturally, there are some that aren't very good at doing that, and it's really just a process of managing the relationship. What we do, Terry, is at that 4th day is we typically give the tenant a call. We're quite sympathetic in our approach. We do this, we have a lot of experience doing this, so there's some advanced techniques with it that we use. But the primary outcome is to get, some commitment from the tenant to when they're going to pay rent and how much. And when we do that, we say, look, so Terry, you'll be paying your rent tomorrow. We mention the date, a rough time frame and the time, and then we mention to them that we are going to put that into an email and into our diary, and we get some commitment from them. So typically that strategy works quite well, but it is a necessary evil. There's nothing worse than one of the biggest problems we see, especially with private landlords, is they rent to people they know, and when their family or friends fall behind in their rent, it becomes a very awkward conversation to have.
Yes, I've had that experience myself, and it's one of the ways in which I learned that it's always very smart to have a professional property manager handling that for you. Just a reminder to people out there watching and listening that if you do have any questions for Mark, just type them into either the chat box that you should see on the screen down below the slide presentation, or the Q&A panel. You can call that panel and type in your questions, and towards the end of the presentation we'll deal with any questions that you put up.
Thanks, Terry. And look, I've tried to put these slides in a fairly logical order. This next one is imperative. Why is landlord insurance critical for my investment property? Look, the first thing to mention is it's a tax deduction. It's typically around about $300 and something odd dollars. But there are a lot of banks, financial institutions, healthcare funds, all of these types of different people offering landlord protection insurance nowadays. Now, there's nothing wrong with them. Some of them can be quite cheap, around about $60, $80, $100. But look, ultimately, like everything in life, you get what you pay for. Given it's a tax deduction, unless you have a problem with cash flow, for around about $300 odd, it's an investment in a peace of mind. Now, even with our best intentions, we screen tenants. We're very good judges of characters. Sometimes we get it wrong. And sometimes situations outside of our control prevail, and relationships break down, and people fall off the rails and they can't pay their rent. Or there's malicious damage done to properties and tenants absconder. In worst case scenario, we saw a situation recently where we picked up a property off another agency, And we were trying to manage the process of the tenant who had been through a domestic violence and relationship breakdown. Anyway, the tenant stayed in the property with a number of children, and over the process of evicting them from the property, the damage was caused, cleaning, loss of rent. And fortunately enough, the owner had landlord specific insurance. Excuse me, just have a quick sip of water. Which covered them for around about $11,000 or $12,000 worth of out-of-pocket expenses. Now, I'm sure you'll agree, for $300, that's a great investment. What we find is with some of these other policies, so your specific ones are the likes of Terry Shear and EBM. There are some other really good providers out there, but you really need to look at your policy and make sure you know what you're getting. A couple of the problems we see with insurance is some insurance providers will cover rent but not malicious damage and cleaning. Others will cover the cleaning and the damage but not loss of rent. And with the loss of rent, it really depends on how the agent has handled that arrears process. The insurers will want to see that process I mentioned earlier has basically been followed to a T. And in that way, then, you know, it would also take some time. Some providers, we've got a case going on with a particular bank and their insurance company, their insurance, and it's taking us 5 months to get the money from them. They try to go through the terms and conditions with the fine-tooth comb and look for every reason to get out of paying it. We do have independent insurance broker that we've worked with for many years. Grant's willing to go through these policies for us with a fine-tooth comb and make sure that when we make application for the insurance claim, that we're giving it the best chance of getting a payout.
So, Mark, that's something you handle on behalf of your customers. If a claim needs to be made, do you help them with that?
Yes, correct. So, look, it's all part of the fees you pay. At least it is here in Queensland. It falls within the scope of works, and any good property manager, any quality property manager should do that for you. Now, look, it's really about managing the process. Ideally, we would love to never have to make an insurance claim, but like I said, there are situations outside of our control which come into play and are a factor. And even with our best intentions and the best quality screening processes and regular inspections of properties, sometimes there is a small percentage of properties and tenants that fall into that category where they need to rely on the insurance.
Okay.
Next question, how many staff will be looking after my property and what level of support do they have? The answer to that question really depends on a number of different variables or factors like office structure. By that I mean support from management and administration, so above and below. Whether the office uses old or new technologies like paper systems or filing or cloud-based platforms, and the property management style, which is primarily two different styles. One is end-to-end portfolio, which means that one property manager does all of the tasks from start to finish, and the other is a pod. There are some variations in the middle, but with a pod you might have a senior property manager, a mid-range property manager, and a new property manager splitting the tasks. That can be a little bit problematic depending on the structure because you don't know who to talk to, and accountability can be a little bit of a problem. I think given the variables that determine the answer to that question, a better question to ask is what's your staff to property ratio? So to put that into perspective, here at Bluestone Property Management, I'm still hands-on in the operational aspects of the business as the managing director. We've got a senior property manager, 2 property managers, an administration person, and a salesperson who is heavily involved in the rental side of the business and has 17 years experience plus a background in body corporate as a strata manager. Our ratio is 1:58, so 1 staff member for, say, every 58 properties. That is considerably below industry average, and that's something that I would be looking for more so than a number of properties that the person manages, because there are some gun property managers out there that say they manage 200 or 300 properties, but they have a large administration support team behind them. There are some out there that say they only manage 75 or 100 properties, but they're the only person in the office with no support from management or administration, and they're basically not only managing those properties, they're also doing every other function within the business. Our next question is, what are the benefits to the client when there's a director or an owner of the property management agency directly involved in the day-to-day management of the property management department? I think ultimately you have a better chance of getting the service that you're paying for, is the easy way or the short answer. Our owners and or tenants can contact me at any time if something's wrong, and I get involved and help resolve it. In some cases, our staff, look, we aren't perfect. We do make mistakes like everyone else, and sometimes things slip through the gaps. I can jump in and either crack the whip and sort it out, or just oversee it. My name and numbers are publicly displayed on our website, and owners and tenants can contact me directly if they need. Ultimately, as an owner of the business, I lead by example, and there's not a job I won't do in our company, and that gives me credibility and mutual respect from my team, which sets the tone for the culture of the business. Our staff feel appreciated and respected. We get low staff turnover, which means low tenant turnover and low owner turnover, and it's a win-win-win for all of the parties involved. That's pretty much it on that one. What are the advantages of having one point of contact? This is not a question we get asked. However, if I'm out socially and people find out what I do and we start talking about property management, I typically try and find out what people's bugbears are or what their biggest problem is as an investor with having a property managed. And the biggest thing I find is communication, and that people would love one point of contact or someone they can talk to. The biggest problem is two things, or the two biggest problems I should say is, one is that they either need to speak to multiple people to get an answer to the question or find out what's happening in their property, or they are given a sort of, no accountability and pass from pillar to post, and lack of either people taking accountability or just communication in general. So they might ring up and make a phone call, or they send a text or an email and they don't get a response. So I find that that accountability is really the thing there, and if they can ring up and quickly find out what's going on and the history to the property, and how that one point of contact knows the little idiosyncrasies about that owner and the property and how they like things done. What knowledge should the property manager be able to demonstrate about the local market is the next question. And another really good question which we get asked in general, not specific to that question alone, but we get asked the following answers to this question quite regularly. A good property manager should know the vacancy rates for the areas that they're working in, the number of days on market, so that's how long a property is advertised, in particular how long it's advertised as a vacant property, which helps calculate the vacancy rates. After all, that's the period when an owner's not earning an income on the property, and ultimately as an owner, if you're not earning an income on the property as the owner of a business, we're not earning an income either, because we do charge our fee on rent collection. Median rental prices for the area, and that's in particular for, say, houses and units and townhouses. Ultimately, supply and demand dictates market price. So it's imperative that the property manager that is helping you set the asking price for the rent is across supply and demand. And last but not least, local infrastructure and amenities, schools, school catchments, transport and shops.
Okay.
Next question is it essential to appoint a property manager who is in the same suburb as your property investment? Look, it used to be the case, but not anymore, because property management companies like Bluestone that have access to cutting-edge technology can easily access the data or any suburb in their region and cover broad territories because they can work on the road with a laptop, Wi-Fi, hotspotted to their phone from a cafe or even a kitchen bench in your property. We can effectively manage your properties across a very large territory. And for instance, we go from sort of Ipswich City to the south of Brisbane, all the way up to the Moreton region on the north, out to Ipswich City on the west, and the Bayside on the east. And we're able to do that through these cloud-based technologies and modern platforms and CRMs and through automation and things like that. The other advantage to an agency like Bluestone's is that that covers a large area. You know, we see people owning multiple investment properties, and they would typically have to have them with two different agencies. This way, you're dealing with the one agency. You know, will have the primarily one point of contact. However, you know, a secondary property manager might be doing the legwork on the second property where it falls outside the other properties manager's portfolio. However, one agency, one point of contact is the benefit to what we call them these sort of super offices like ours. Next question, how regularly should your property manager inspect your property? This is a question we are asked frequently directly, and the short answer is a minimum of 2 times a year and a maximum of 4. The maximum is at 4 due to legislation. Ultimately, it depends on the quality and the history of the tenants, and by that I mean if we had a tenant start, any tenant starts, we always inspect the property within the first sort of 3 to 4 months. Even with our best intentions to do a stringent tenant selection process, sometimes people slip through the gaps, and it's a good opportunity to get in. The other reason for that is that the previous tenants become quite complacent with things like maintenance, and they learn to live with little problems, and these are quickly picked up by the new tenants. There is an exception to that rule with those 4 inspections a year, and if we have long-term quality tenants that have a history of taking care of the property, we'll ask the owner if they are interested in dropping the inspections back to 2 a year in the interest of giving the tenant quiet enjoyment of the property. And we do this primarily because it results in the tenant staying longer. They feel as if they aren't being watched or checked on as frequently. Feels a little bit more like a home for them, Terry, and they typically stay on for 3, 4, 5 years. Now, the benefit to that is that the investor gets a much higher occupancy period. It doesn't take much to sit down and do the sums on even a slightly lower rent, but with 100% occupancy for a 5-year period will yield our investors a much higher income than it will through constantly cycling through tenants every 6 to 12 months.
Mark, the inspections would have benefits both ways, wouldn't they? Not just for the landlord checking on what the tenant's doing, but it's also an opportunity to check on anything that needs to be fixed, an opportunity for the tenants to perhaps alert you to little problems. So it's an advantage to the tenants as well, I'd imagine.
Absolutely, yeah. No, good point, Terry. I hadn't. I am aware of that, but I hadn't thought of it for today's webinar. But no, that is a cracking question, because 2 things happen there. Is that as a property manager, we train professionals to look for preventative maintenance. So we'll see like a slight watermark in the ceiling. Maybe the tenant hasn't noticed where one of the clips that holds the tiles on might be loose, and the water's just dripping through slowly and leaving a watermark. We might notice a crack in the plasterboard, and that might be the start of some subsidence issues, which are much cheaper to fix on the front end as preventative maintenance than they are on the end. We do send our owners a detailed report, including photos. That's done electronically through them. So it keeps a history to the property. The third advantage to that is that when the tenant moves out, let's say they have been there for 5 years, there's a report that shows the fair wear and tear on a property. So in some cases, a property can deteriorate quite quickly, and the tenant might claim that that's happened over the 5-year period and as fair wear and tear. However, we can sit down and say, like on that story I mentioned before, that unfortunate situation we got into when we picked up a property off another agent, we were able to go back to the previous inspection report that was done by the other agent before we took over, and that was before the relationship broke down and the domestic violence, and we were able to go to QCAT and say, here's the condition of the property 4 months ago, and here's the condition of the property now, and the adjudicator ruled in our favour, the owner's favour, which helped us get that insurance claim.
So Mark, this whole discussion point is one of the ones that's of most interest to me as a property investor owner, of what you can expect from your manager in terms of inspections, and what you can expect from your manager after they've done the inspection in the way of a report. I really like a manager who perhaps does quarterly inspections and follows up by sending a detailed report with photographs. That's, from what you're saying, that's the sort of thing that you do at Bluestone as well.
Absolutely. That should be a minimum expectation. Oh, mate, I'd hate to admit, for the greater good of the industry, unfortunately, that we do unfortunately see, I mean, we do see the worst of the worst, because we are picking up managements from other agencies. The owners are obviously leaving because they're not happy with the service that they've been provided with. And I cannot recall the amount of times that we've picked up these properties, and we would consider the quality of the routine inspection reports that the owner's been provided with to be severely inadequate. Yeah. Ultimately, look, we are your eyes and ears on the ground. We've got the vast majority of our investors are interstate, with a couple overseas. They're paying us a good amount of money to take care of that property for them. Like I said, be their eyes and ears on the ground, and they're really relying on our representations of the inspection of the property. So, if someone invests $500,000, if I invest $500,000, I want to know what that $500,000 looks like you said. And the only way I can do that is through this detailed, regular reporting. You will find some agencies do keep, like ours, when we have our interstate investors, they do like to come up. Quite often we don't get a lot of time, and we keep that fourth sort of inspection up our sleeve, so that when our investors come up and they say, hey Mark, we're going to be in town in a couple of weeks' time, can we look through the property? If we filled our 4 inspections quota for the year, we need to find some other excuse, a valuation or a maintenance request. We have done this before, where we've had to try and come up with some valid reason to get our owners through. I would prefer to just ring the tenants and say to them that the owners are in town unexpected. They'd like to have a look at the property. We realise that we legally can't come through for the purpose of an owner inspection. However, they hope that they can appreciate our upfront honesty, and we get a mutual agreement in writing from them, and we typically find a suitable time to get the owners through the property.
It is important, isn't it, Mark, for landlord owners to remember that these properties are the homes of their tenants, and they do have rights around that in terms of to be notified and to not being constantly invaded.
That's right. Yeah, and speaking of rights, some would say they have arguably more rights than the owner of the property. But there's some sort of a balance there. We could talk about that all day, and probably the discussion for another webinar down the track. But that leads on to the next question: how often should my property manager communicate with me? And every owner is different, and we have owners, savvy investors that own multiple properties that we've managed for years, that we've built up a lot of trust and mutual respect with them, that say to us, look, Mark, I don't want to know about the everyday items. I only want to know about emergencies or things like that. We're paying you a lot of good money for you to do a job, and we trust your ability. Please only let me know if something is urgent. On the other hand, we have the total other end of the spectrum, where we have owners who want to contact us, at times every day, multiple times a day. For instance, if their property is vacant and they don't have an income coming in and they need to make a mortgage repayment. So it's trying to balance that out and establish those communication, the degree of communication. One of the methods that we use here at Bluestone is that we ask owners their preferred method of communication. So we would say to them, we make a record on the file. Certain owners in this day and age, I would probably hazard as a guess, I'm doing more and more SMS or text communication with people every day. And it is a little bit more of a direct way to get in front of people than an email. And phone calls obviously is the best way, but and we always follow up every phone call by confirming the conversation in writing. Regardless of the level of communication, there are critical times that we always advise owners, things like change in tenancies, emergency repairs, arrears, break leases or end of leases, for example.
Yeah. Mark, a key point for me is that as a property owner is at what point do I want the property manager to contact me when something needs to be fixed and money wants to be spent. You don't want the manager to be contacting every time $50 needs to be spent necessarily. Do you normally sort of establish up front with your investor owners at what level of spending do they need to be contacted and approval given for a repair, for example?
Yeah, yes, Terry. Yeah, look, another really good question. And thank you for asking that, because that was an oversight on my behalf and something I probably should have touched on. But we do have a spend limit, and that is typically set at 2 weeks rent. Now, there are times there are exceptions to that rule. We do have other owners that, especially initially when we take over their property and the management of it, and they've had a bad experience in the past. Now, look, we always endeavour to get, even if we had a 2 week spend limit, policy at Bluestone is that we will still contact you, Terry. We'll send you, try and give you a call, and then send you an email or a text message before spending that $50 if you require. Like I said, there are some owners that we do have permission to spend that up to that 2 weeks rent without contacting them, but I would dare say that's an exception to the rule. The majority of owners, even if we have that limit, we, as a courtesy, I think it's just a professional courtesy. It doesn't take much to pick up the phone, send a quick email or a text and say, hey, Terry, we need to replace the seal on the oven. It's going to cost $50. Just thought we'd let you know. You'll see it on your next statement, or is it okay? And the reason, just to sort of, I guess, quantify or validate that 2 weeks rent, how we arrive at that figure is that Queensland legislation allows the tenants to spend that much money in emergency repairs. Now, the way we see it is if we can spend that money rather than the tenant picking up the phone book or Googling an electrician or a plumber that might come out and do the work, it may even be a tradesperson that the tenant knows. I know you'd think that probably wouldn't happen, but we have had this situation in the past where tenants have rung up and organised what they classified as emergency repairs, or they had their tradie mate put it on the invoice that it was an emergency repair to get work done, only to find out that it wasn't, and the tenant's therefore liable to pay for it. So that's set at 2 weeks as a default under Queensland legislation. Not every agency does that, but we would rather control that process because it gives us the ability to say to the tenants that, look, we have that authority to spend that money for and on behalf of our owners, and we do need to be seen to be mitigating loss for our owners, so we can't go and spend that money willy-nilly.
So what's a situation where a tenant has the right to spend on emergency repairs? What's a typical situation where that might happen?
If they had loss of power, a hot water system, for instance, an oven not working. So they're deemed, it's publicly available on the website, and we have part of our process is we run through this with the tenant induction. Excuse me. We also make that information available on our website, and we do broadcasts through the year, especially like when we had that cyclone coming down off the coast. Late last year, we sent a broadcast out, a bulk email through our CRM to all of our tenants, just reminding them, be storm aware. These are some things that you can do. Here are your emergency contact numbers. Here's a list of what is classified as an emergency repair. If this happens, they need to try and contact us. We've got a certain time frame that we can get back to them within. We have phones that are manned 24 hours a day, 7 days a week. for emergency repairs. If they follow that process and they can't get a response from us, or they can't contact one of our preferred suppliers, then they can take it to the next step under Queensland legislation and organise their own repairs to the value of 2 weeks' rent.
Okay.
It's quite a strict rules and regulations and laws governing that. So again, one of those technicalities that if you're a private landlord and you might only get emergency repairs once every 5 years, you become unfamiliar with dealing with the process when it's not something that you do on a regular basis. Right, Terry, you got another question there for me, or?
Oh, no, I'm just letting you know we're about just over 50 minutes in, so probably time for you to deal with one or two more of those common questions, and just to allow a little bit of time for questions that are coming in from people who are watching and listening.
Okay, I'll just have a look at the questions. Give me a second. I'll just do two more then. And then we'll jump through. So why do you want someone that's got a lot of experience? With age comes experience. And like I said before, there's no substitute for experience. Property managers with more experience have the knowledge to draw on to deal with most scenarios. And like I said, there's so many variables. Every property, every owner, every tenant, and every office are different and unique in every way. And with those variables comes an endless possibilities of outcomes. Having said that about the age and the experience, we are mindful at Bluestone that younger staff bring a fresh approach and different perspectives, allowing us to evolve and keep up with the times and technology. So being such a complex, I guess to wrap that up into a nutshell, is that being such a complex industry with so many variables and ambiguous legislation, we just find that an experienced property manager can deal with more of those problems. And look, probably the best way to put this into perspective is that you're going to pay the same amount of money for an experienced property manager with 10 years experience as you are for someone who only has 5 minutes experience. So if I was making that decision on an investor's behalf, I would certainly want my money well spent with someone who has experience. And why is it important to have stability and longevity? Nobody likes the revolving door of property management and staff within an agency, because inevitably there will be information that doesn't get passed on. Even with the advancements in technology, 100% of the history and information unfortunately doesn't get recorded. That's just human nature. It seems mainly the seemingly small things fall through the gaps, things like unique ways that different owners like things done. Property management is a really, really tough gig, and property managers are often the piggy in the middle, mediating between parties to create fair outcomes. So property managers that's had time in the trenches and time within the office, that knows how the office works, knows how the owner likes to do things, and has been there for that tenant that's been in that property for 4 to 5 years, is only an advantage to the investor when they're paying that fee, regardless of how much experience they're getting for a property manager that's been in the industry for 5 minutes or 5 years. Now, our fees are sustainable, they're fair, and they ensure that we can be here today, tomorrow and next year, and paying our staff well and incentivising them to ultimately create a better outcome for you as the owner, and that's through maximising the yield. All right, what I'll do, Terry, is you go, mate.
Yeah, well, I think it might be an opportune time to just put to you some of the questions that's come on from some of the people watching and listening, and then allow a little bit of time for you at the end to speak to the special offer that you're making to people today, by way of wrapping up at the end. So Robbie's asking a question, which is a situation I gather that he's experiencing as an owner. He's asking, is it a property management role to manage a situation with the neighbour doing a a construction build next door on a couple of townhouses. I gather that he's experiencing issues like the side fence being damaged, there's water damage, there's trespassing issues, there's materials from the building left on their side of the fence. What would you as a property manager see as your role in a situation like that?
Yeah, look, that's a good question, Robbie, and thanks for asking that. And I guess it really depends on a couple of different factors. I'm not particularly, I don't know, other than what Terry's just mentioned there, the circumstances. So I'll try and cover this generally. But look, my name and number, I think, will be available at the end there. My email will be there. After this is done, look, please don't be afraid to reach out to me, and I'll do what I can to help you out. But look, most of those things are outside the scope of works generally that a property manager will cover. And, you know, things like Dividing Fences Act are one of the biggest issues that are a problem for us to try and deal with, because we're only responsible for your side of the property and your side of the fence. And, you know, anything that happens from sort of halfway through that fence to the other side is outside of our control. And we have limited, I guess, leverage over the situation as the agent than you do as the owner. So I typically find that what we do here is we will work with you, Robbie, as the owner of the property, as the managing agent, on a sort of united front. So rather than us trying to take it on ourselves individually, and we don't really have, like I said, the leverage that you do as the owner with the neighbour. However, we find that better than you taking it on yourself, we come as united front. We can provide you with some information based on many, many years' experience, you know, being also up to pace with local laws, you know, different bylaws if it was in a body corporate, and the rules and regulation around the local council and different things like that. So I think that you need to probably work with your property manager and let them know that you are willing to get involved to try and, you know, help create a suitable outcome. And that really is probably the best way, because you can't stop progress. You know, properties will be developed on your boundaries. That's inevitable. Not everyone will see it in the lifetime of their investment property. And these things are really just about managing those relationships and managing that process, trying to keep the neighbours on side and make sure that they are conforming, and where necessary, involve the local council. And, you know, hopefully it doesn't get to that point where you need to go to court or get the police involved. But, you know, once it gets to that, my experience, having done a lot of this over 20 years, is that once it ends up with the police or adjudicators in QCAT, the outcome usually isn't favourable for any of the parties. So mediation, either beforehand or preventative negotiations on the front end, are the easiest way to resolve issues that you're facing. So like I said, reach out to me after this, Robbie, and I'm more than happy as a webinar attendee to jump on the phone with you and try and help you through the process.
Yeah. Thanks, Mark. Rodney's asking a question that's probably on the minds of a lot of investor owners, and that is, what can you do to increase your rental in innovative ways to show the bank, for example, that you're able to achieve higher rent? What are some of the standard ways, things that landlord owners can do to improve the rental they can achieve?
Yeah, look, the most typical ones we see is, I mean, the general rule of thumb is obviously don't overcapitalise. You know, you'd ask your property manager, what I would be doing is, you know, for instance, you might put an air conditioning unit in a property to maximise the rental yield here in Queensland, but you may find in other areas that's not needed because of our climate. So I would ask your property manager, what is something that tenants are often asking for in my property and also in your other portfolio? And they should find that there's a fairly common thread. In addition to that, things like dishwashers and air conditioning units, generally what we advise our owners is to, you know, freshen up the paint with a neutral colour scheme, you know, update the carpet every sort of 7 or so years. There might be an opportunity. A really obvious way to increase the income is if you could put an additional bedroom in. We've just had a property recently we managed, which is a 2-story home. I think lots of people listening today, Terry, would be somewhat familiar with this floor plan. You've got the kitchen and lounge room on the ground floor with the garage, and then you go upstairs. At the top of the stairs, there's sort of like a large landing and a sort of open office with 3 bedrooms, a bathroom and an ensuite. And a really obvious way to increase the yield in this particular property was to convert that open study into a 4th bedroom. That is a really good way. You and I spoke a couple of months ago, and we had an article in the Money magazine which talked about this as well. And there are a number of different ways people can maximise. They can put a granny flat or additional accommodation on through an extension. You'd need to speak to your council and make sure you're conforming to the rules and regulations that govern the area that your property's in. But look, I think the short answer there that we find, and I did cover this off a little bit further down the list, and just reiterating that people can get access to those Q&As and that cheat sheet later on. But the best way really to maximise is a good property manager that's going to be working for you and charging the highest possible rent. That's going to keep the property occupied as much as possible, minimise vacancy rates, good tenant selection, and the owner maintaining the property to the highest possible standard. So if a property manager can sort of get the highest possible rent for the longest periods of time, they can get the tenants to minimise fair wear and tear in the property, and educate an owner that they are best to repaint the property, let's say and recarpet the property every 7 to 10 years. That's ongoing, small investments or budgeted that will maximise the yield of the property, every year, each and every year. We do see a number of investors, unfortunately, aren't prepared to put money into a property. Sometimes we acknowledge, yes, they can't afford to, which is fine. Other people who are in a position to afford to, but just don't see or can't justify the expense. So, yeah, hopefully that answers the question there for you today, Rodney. But again, if it hasn't, then please reach out to me afterwards. I do have some other material available more specific to that question. And again, it's one that we can probably sit down and talk about for hours.
So Mark, I hear increasingly investor owners thinking in terms of letting their property on a room-by-room basis, particularly if it's proximate to a university, for example. Is that something you think is a good idea, or does it bring in extra sort of maintenance and management issues?
Yeah, look, it is a specialty area. It comes at a high cost. We don't do this, but I know some people that do. The management fees can be double what people pay here, around 15, 16, even in some cases even 20%. You need to take that into consideration. It does have fair wear and tear on the property, is naturally increased. A couple of things you need to consider is Queensland Fire and Safety rules and regulations. So you need to put individual locks on every door. Walls need to be fire rated. Additional smoke alarms need to be installed. So that higher yield does come at an increased cost. So you need to sit down and do the sums.
Yeah.
Yep.
So it's just not as simple as just deciding to do it and increasing your yield. There are consequences of taking that approach.
There are. And look, we didn't get to this point. There are private landlords that have done that. And there are situations where they haven't met. A recent case that I'm aware of is that in a boarding style house, and the place burnt down, and as far as I'm aware, I'm not exactly sure where this case is at, but the fire department did their checks and the compliance wasn't there. So ultimately, the owner of the property is liable. Luckily, nobody died in that particular fire, but if someone did, then that falls on the weight of the owners of the property on their shoulders.
That's some serious liability apart from the human tragedy of it.
If you didn't go broke and end up in jail, you'd be lucky.
Janelle's asking, how hard is it to change property managers? I suppose that relates to whatever's been signed in the first place.
Yeah, look, that was the last question I had here, and we do get asked this one quite a bit. Being an agency of choice where we find, people, I guess, because of the nature of the way we do things and our willingness to share information like this, it helps with that. Now, look, changing is surprisingly easy. Under Queensland legislation, you're only bound to an agreement with a termination period of 30 days or less if mutually agreed by both parties. We can send the forms to you electronically via DocuSign. Literally can be done in minutes. We do all the dirty work and heavy lifting for you, Janelle. We contact the other agent and issue them with the notice on your behalf. Naturally, you can do so if you like, but we quite often find that the experience that has led the investor to make that decision, Terry and Janelle, is that they don't feel comfortable approaching their tenant. So we do that for you. And then we make arrangements to go and pick up the keys, the remotes, any sort of warranty books and things like that, and the tenant pack, and reach out and contact your tenant and tell them that they'd start paying rent to us. So look, the short answer is very, very easy and very quick.
Okay, Mark. Well, thank you for those answers to those questions. Perhaps you could just take us through to those special offers that you're making to people that are participating as consumers today as we get towards the end of the presentation.
Yeah, wonderful. Thanks, Terry. Look, I'm a firm believer in I guess, telling people how it is. And I have, to be honest, had some feedback by some people saying I'm a little bit too direct, but unashamedly, I tell people I don't scaremonger and I don't sugarcoat. So what we've got on offer today is an offer, which is an opportunity for today's attendees and anyone that registered for today's webinar to leverage off my experience and knowledge by receiving a free rental health check. It's complimentary and it comes obligation free. There's no hard sell. Now, what we'll do is we'll go through, we do a rental review. So we'll check to see if you are receiving, the best rent for your property. Now that would come in the form, I'm just going to move where you and I are sitting on this screen, so bear with me for a moment. I'm a bit of a rookie at these presentations. We'll do a rental review. So Terry, will take your property, for instance. We check it online against other properties that are comparable, that have recently rented within the last 6 months. We'll send you a report, and if we can justify a suggested increase, we'll do so. There are other factors to take into consideration, like how long the tenant's been in the property. So if a property's been tenanted by the same people for 5 years, understandably the rent might be slowly behind or below market value because you get that higher occupancy rate that we talked about earlier. We do a tenancy review, just double check to see if your tenant, that you are protected under the legislation and that your tenant's not on any blacklists. Is the next thing there, the tenant screening. So we'll make sure that, it's, like I said, some agencies unfortunately aren't checking these databases and giving people second chances, which should be a decision you make as the owner of the property, not them. The fourth thing is, we'll check your latest or one of your latest routine inspection reports like we talked about earlier, Terry, just to make sure they're of good quality, they're thorough, in detail, and include photos. We can do a landlord insurance review for you, just basically let you know what we think of your policy. We are accustomed to reading these policies frequently, so we can get through this information quite quickly and just let you know. We'll make an advice to say, look, yeah, the policy you're on has you well covered, or it would be our recommendation that you change to a more specific policy that covers you as the landlord. Finally, just an agent review. Just check your management agreement. Make sure that your agent's passing on all possible costs to the tenant. Like in Queensland, we could get water usage. We did a recent acquisition of a rent roll and ran about 200 properties only to discover that a lot of these people weren't being charged for water. So the owner was paying a $250 water usage every quarter, $1,000 a year, only to discover they could have been getting half of that money back from the tenant. And last but not least, just a management agreement, a review. Like I talked about before, some of the ploys or the tricks and tactics some of these discount providers or agency use are low front end fees, but they have a hidden fees either in the fine print or they are illegally charging you these fees afterwards, because unless a fee is listed on the management agreement, technically under Queensland legislation, an agency can't charge you for it. Now, once we go through all of that, Terry, what we're going to do is I'll do that personally myself. So, you know, second generation agent, 20 years experience with the property management rentals industry. I'll go through all of those steps there, and I'll provide your listeners, our listeners today, with a complimentary consultation. Where possible, I'll jump online with them like this and walk them through our report. If that can't be done naturally, it'll just be emailed through, can be followed up with a phone call. Obligation free, no hard sell, without any sugarcoating or scaremongering.
And if they want to take advantage of that offer, Mark, what do they do?
Yep, anyone can just email me. The details are available on these slides. They can get the email address off you, I understand, Terry. And as discussed earlier, we'll send out a copy of these slides. I think, are we able to do that to everyone today? Send them a copy of these slides?
Everyone is registered for the webinar today, Mark. We'll receive a recording of the webinar event. So, yeah.
Okay.
That's a question that Michael is actually asking in the chat panel. Can you get a recording? Yes, Michael, if you did register for the webinar, you'll be automatically on the list to receive it. If you didn't register, you've come to it in some other way, well, perhaps contact us and we'll make sure you get a copy.
Okay. Yep. Thanks, Michael. And it's going to be audible in case anyone's listening and not watching today. So that email address to contact me on is mshorrock@bluestonepm, BLUESTONE, P for property, M for management.com.au. Now, Terry, we've got a bonus offer for the people who've been kind enough to share their valuable time with us today, and that is if you register now or, you know, in the not too distant future for that complimentary obligation, no strings attached health check, you'll also receive a copy of my notes from today. So it lists all 19 or 20 questions plus my bullet point dot-to-dot answers. And this is something that normally is valued around $249, but absolutely free for webinar attendees today.
It's a great offer, Mark. Thank you for that. And I've got actually a copy of the notes, the questions and the answers that you prepared for this webinar are very comprehensive. And yeah, it's great as part of the offer that people can get a copy of that and they can go through at their leisure and get detailed answers to all those most burning questions they might have about property management issues.
Yep. And just last but not least, I guess if people don't go through with that, they've got any other specific questions, you know, Robbie wants to reach out, and or Rodney or Michael there that asked that question late in the game, my mobile number is 0439 979 095. I'll just repeat that again. Grab the pen and paper, 0439 979 095. Otherwise, if you've got any questions that aren't covered today or weren't covered today, I should say, and or that aren't in that cheat sheet that I'm happy to provide to anyone that goes through with a health check, then please email me at mshorrock@bluestonepm.com.au.
Okay, great. All right, well, thank you, Mark. Thank you for that comprehensive overview on the most burning issues of property management. I know I've learned a lot today, some things that I wasn't aware of, such as that legislative right for tenants to spend a certain amount of money on emergency repairs, and it's very important for people who own an investment property to be aware of those kinds of issues and be on top of them. So thanks for providing such great information, and I do urge people who have been participating to follow up with Mark, email him or phone him. to take advantage of that special offer. That's a great offer. No obligation to have so many of the elements of the property that you own checked out by a very experienced and professional property manager. I think it's a fantastic opportunity. So I hope lots of people take advantage of it. So thank you, Mark, for your presentation. Thanks for everyone for participating, and let's do it again in the not too distant future.
Yeah, thanks, Terry. Look, just quickly, that cheat sheets, whilst it's valued at around about $250, that other offer, it's a money can't buy offer. We don't sell that independently outside of this webinar here today. You're tapping into 20 years direct experience, 40 years indirect experience through growing up around the kitchen table with parents that owned and operated 3 Al Hooker franchises on the Gold Coast for 40 years. That health check, that comprehensive health check really is a money can't buy offer. So if you're genuinely interested in tapping into my knowledge, then please contact me via email.
All right, great. Okay, well, once again, I do urge people to take Mark up on that offer. Thanks again, Mark, and thanks everyone for participating. This is Terry Ryder from hotspotting.com.au signing off. Let's do it again soon.
Thanks, Terry.